Hey guys, welcome to a video for My Crypto Guru. I'm putting this out because I'm getting a lot of questions about BlockFi and the SEC fine that was levied back on Valentine's Day, February 14th, just a few days ago. Today's the 16th. So, in essence, first of all, I want you to know that there is nothing in here that I think is going to put BlockFi out of business. I think your assets are fine. This $100 million fine sounds like a whole lot, but realize, they're a $3 to $4 billion company. They've had, $500 million in VC funding here, in the last 6 months or so. Their business is still profitable as far as I can tell. They've got about 15 billion in assets. Last I could again tell, it's not like they're exactly forthcoming with this information. Being a privately owned company, they don't really have to disclose things like publicly traded companies do. So anyway, the SEC levied a $100 million fine against BlockFi, 50 million of that being to the U.S. government, 50 million of that being divided up among 32 states. I would assume the ones they have licenses in. I don't know. It doesn't list that. We can see the press release from the SEC here. But essentially, the SEC has stated that they found that BlockFi was offering and selling interest accounts to the public, and through those accounts, investors link crypto assets to BlockFi in exchange for the company's promise to return variable monthly interest payment. Okay, this is actually like what they found wrong here. So the order finds that BIAs are security under applicable law, and they were in violation of the Investment Company Act of 1940. Now, again, this is normal. This is expected. This is not out of the ordinary. We knew these kind of things were going to happen as the U.S. government tries to figure out how to make crypto and crypto-related investment accounts and DeFi systems and all that work within the framework of the laws that are already in place. Quite frankly, they're going to have to change a lot of the laws, but they're doing what they can to try and shoehorn things together. Now, let's talk about why I'm actually upset and why I moved my assets from BlockFi last night. And I did. I moved everything from BlockFi last night. And I want to stress, I didn't move it because of this statement in the sense of the risk change. I moved it because they lied to us. And if you notice on their website, and the SEC put this down here, and quite frankly, to me, this is way more important to us as investors in BlockFi, because you're lending your money, you're trusting them with your assets, and then you find out that by this line right here with the SEC, which again should really be way higher, I think, that they lied to us. So BlockFi has been consistently paying the lowest interest rate of anyone in the DeFi, let's say legitimate DeFi space, okay, like Celsius, Voyager, Ledn.io, and Crypto.com, and in exchange, it's been kind of accepted, at least with the Reddit people I talked to and some others, that everyone kind of goes, okay, well, you know what, they are paying the least, but I'm going to go ahead and keep my money with them because they also seem to be the most stable, the least risky of all those in that space. Which, again, I'm not saying they're any more or less risky than those other guys. I don't know. It's not like those other guys are out there telling us where their books are at either. But it's not a matter of are they risky or are they less risky. It's a matter of were they honest with us about the risk. And that bothers me more than anything. I wouldn't put money into a bank that lied to me about what they were doing with it. I don't have money in BlockFi that they were lying to me about their collateralization. So I've highlighted here, the SEC stated, the order also finds that BlockFi made a false and misleading statement for more than 2 years on its website concerning the level of risk in its loan portfolio and lending activity. Now, on the website, but also pretty much every interview that the founder, Zach Prince, had done, also states that they were over collateralized with the majority of their institutional investors. Okay, those podcasts are out there, those videos are out there. I would assume they're still out there if they haven't been deleted. Where this statement's been made over and over and over again, and everyone appreciated the transparency and appreciated how things were handled, and that's why they accepted a lower interest rate. But if I'm going to have just as much risk with you, then you need to pay me what everyone else is paying me. That's the point. I should be able to make that decision based on honesty and transparency, not based on what you told me and found out because of an SEC audit that you were lying to me. That's what bothers me. So come to find out, it's not the majority of institutional investors that were over collateralized with them. It's about 17%, which isn't even close to half. It's not even a quarter. So that is a massive, massive problem for me, and that's why I got out of BlockFi until this situation gets resolved. And quite frankly, I think they'll have to turn into a publicly traded company to do the things the way they want to do it. which means that they're going to have to start reporting things more publicly, and then maybe I'll come back. But as it sits right now, zero balance. And it also concerns me a bit that there may be a run on assets with BlockFi because of what's going on right now, because of this statement that the SEC where they lied to us. Um, and it means I want to get my assets out before there's a run, and maybe I can't get everything out. I don't know. I don't. I'm not saying that may happen. I'm not saying they don't have enough to cover us. I'm just saying like I just want to get out because I have a personal concern there. So anyway, so let's talk about what is going to occur in the DeFi space because of this. I personally think you're going to see a lot of places like Celsius, Crypto.com, Ledn.io, and maybe Voyager, maybe not. We'll talk about them special in a second. They're a little different than the other guys. I think they're going to have to go to what's called accredited investors. Okay, so if you're in the U.S., again, this is all U.S. based. If you're outside of the U.S., none of this really matters. As it sits right now, if you're a U.S. investor in BlockFi, you are continuing to earn interest on your interest-bearing account with BlockFi, but you cannot add any more assets to it until they get this situation resolved and become in compliance with the Investment Company Act of 1940. But let's say down the road, let's say after this going, what other platforms are out there that do work with the U.S. government? Again, Crypto.com, Ledn.io, Voyager, and Celsius are the big ones that I'm talking about. An accredited investor is one that has a net worth of at least $1 million, excluding the value of one's primary residence, or have income of at least $200,000 a year for the last 2 years, or $300,000 combined if you're married. Okay? So, what I think is going to happen is a lot of these companies are going to go over to accredited investors, which would be allowed to get in what's considered a more risky, and I roll my eyes because not really, but what is legally considered a more risky investment, okay, without having to jump through a whole bunch of hoops. And Celsius is already starting to line up accredited investors because they want to be able to distribute their Cell token, which is considered a product that would require you to be an accredited investor in order to obtain. So accreditation is not that big a deal. It involves a letter, and quite frankly, I'm going to be real honest with you. Most companies don't check what you send them. But anyway, um, so it involves a letter, maybe a little bit of proof of assets and things like that. It's not really that big of a process. But here's the good and the bad news. If it goes to accreditation is required, and we're going to talk about what may not require accreditation here in a second. But what if it goes to accreditation? The good news for those who are accredited, okay, or can obtain accreditation, is that the SEC can't stop demand. Okay? They can't stop someone from wanting a loan on cryptos, but they can destroy supply. So, like everything, supply and demand determines price. So, if there are a whole lot fewer people putting money into the crypto system to allow these DeFi systems to loan out, what does that make my money worth? It makes it worth a whole lot more. So, personally, I feel if the accreditation route is the way most of this goes, you're going to see much better rates for those who are accredited because it's going to cut back supply on the smaller lenders. Those guys are going to have to go away, unfortunately, and I'm not for that. I think it's horseshit, but it is what's happening, I think. But those who do stay in, their dollar or their crypto or their Bitcoin, their Ethereum is going to be worth that much more, and I think they're going to get a higher interest rate because of it. So, good news for some, I think bad news overall. Now, let's talk about Voyager. Voyager, because it's a publicly traded company, I believe is going to be treated differently as far as selling securities and the investment accounts and all that stuff, which is why I think if a company doesn't want to deal with accredited investors or wants to expand its client base to a much larger group, they are either they're going to have to become a publicly traded company. That sets the rules a little different for those guys, okay? So they can go out there, they can sell these investments, they can do these accounts. But you know what's nice about being a publicly traded company? They also, okay, they also have to have public disclosures of their asset levels, where their money's being spent, going, how much, what do they have under their umbrella, and how are they managing it? So, and they're audited, and so there is some good news in that if they go the publicly traded route, which I think maybe some of the bigger ones might. I don't see Legend.io doing that. I think Legend.io, personally, I think is small enough that they will probably. Well, let me take that back. I think they just got bought by a U.S. company, and I haven't looked into that, so maybe I shouldn't speak to that. But you might see one or two go publicly traded, and you might see one or two go with accreditation. But I think accreditation is coming for at least one or two of them, if not the rest of them. It just depends. I think what's the cost versus reward, right? That's what every business goes by. So anyway, this is what's going on with BlockFi. If you have questions, you're more than welcome to send me a message through YouTube, Facebook, whatever. And we can discuss this a little bit more. But I would stress that I did not pull my money from BlockFi because I felt like they're going out of business. I don't think that's what's happening at all. In fact, I think when this is done, they will probably be stronger than before. But I really don't appreciate being lied to, and that's what I feel has happened here. So, me personally, I'd rather put it somewhere that, you know, I don't know. I just feel like it's been a little more honest with me about things. But anyway, okay. Well, that's it, guys. So again, if you have questions, feel free to message me. Click like, subscribe, whatever, blah blah blah, all that stuff. I never really cared about that. But anyway, y'all have a good day. See ya.